Everyone. Welcome to our Wednesday morning trading room. Just a moment, I'll get the screen share happening. All right, so the NASDAQ still crazy strong. Here's the NASDAQ yesterday, waffling for most of the session. Took a big bounce off of the overnight lows, which were also very close to Monday's lows. And boom, here we go. So we're opening the day around the 54.20 mark, and we finished off yesterday around 5,400. So we've got about a 20-point gap, or it's going to look like a 20-point gap. And of course, the deal with gaps is you're always wondering, is it an expansion gap, or is the market going to try to reverse and fill it? My first thought with a big gap like that is always a reversal. So we don't really have reversal signals yet on the Hawk, the Falcon, or the Eagle. If, however, this current test of the high fails, the Raptor may give us a counter trend signal. And what time is it? Oh, we're about 4 or 5 minutes into the session now. No signals just yet. Technically, we've got a macro pullback signal building here, so that is a buy. And now we've got a trend line touch signal here in the Falcon as well. So a couple indications that the market is still bullish. It's a little bit of a balancing point where we're at, however. A breakout above the high, very likely to see a little bit more of a rally. Can I cover the trade down there? Ooh, I can. So this is just a basic, pardon me, trend line touch. The market has pulled away from the signal, so it's also like a second push on the entry. And I've still got my eye on the Raptor here for a possible short. A little bit of buying pressure here. See on the Geiger counter, we keep, well, we were flipping over to the buy side. What a neutral bar. My goodness. You don't want to get too far away from the 54.18 area. Not yet, anyway. All right, here come the buyers again. See the Geiger counter pulling over, getting a little sticky on the buy side. Thanks, Steve. Steve reminding me oil inventories today in about an hour's time at around, well, at 10:30 Eastern, 7:30 Pacific. Well, we're still stuck. All right, here we go. Come on, don't stop now. Look at how wide that particular bar was, the one that just finished. Just shows you all the volume that was going through there. Oh, come on. I hate this waffling after a breakout. Wonder if I should try to run this one out a bit. Ooh. providing I even get to my break-even trigger. I'm getting a little bit ahead of myself. Come on, buyers. Where'd you go? I'd love to see one of these bars here finish higher, obviously, but that would give me a really good excuse to roll my stops in. But I think I'm not going to wait for that. I think I'm going to roll my stops up below here anyhow. If the buyers are going to show up, they better do it, and soon. Clayton asks, how do you change to your one contract to a runner after you're in a trade? Just X out your profit target, Clayton. Well, I had higher hopes for this when it started. Shoot, gonna get tagged here. Stinkers, get away from there. Looks like I was a little bit too early, or maybe even a little bit too quick with my stop. I just don't feel like leaving much more out there right now, especially since my initial thought was we were going to see a reversal. Now they're toying with me. there's obviously a little bit of buying support down here. I don't know if 54.15 is going to be enough to allow the buyers to rally the market. It's not unusual to see the market dip, say, to 54.14, 54.13, and then resume the rally. That's entirely possible. Steve's asking, is the Falcon showing a double dot reversal? Well, yes, but remember, with the counter trend, you want to be able to tie it in to something ideally in the not too distant history of the chart. And we haven't had these highs for quite some time, or are these even new highs? So technically, yes, it is a double dot reversal, but it's not a very strong one because I don't have anything back here. If we look back here and we saw that the last time the market got here, we had that kind of reaction, then that would make this a much more probable sell. Reversal signals, counter trend signals are always very, very tempting, but you need to be very selective at which ones you take. The only advantage to a counter trend trade is that you're usually able to keep your stops fairly tight. So your entry would be here, your stops obviously above the highs. So in a way, you're able to minimize your risk a little bit. I don't normally use the risk percent mode on a counter trend trade. I'll usually just throw a single on it and keep my fingers crossed. Well, we're seeing a little bit of a bullish push and got a lucky break here, I'll admit. Don't know if I'm going to get a chance to get this trade to break even. But as we get closer to these highs, the 54.23 area, I'll be a little bit more inclined to take a break-even trade. Come on, get up there. Okay, I'm going to take this trade to break even now. It looks like we're catching a little bit of heat off the 54.23 area. Again, this may prove to be a little bit too quick. The market obviously trying to sort itself out here this morning. But it may also end up being almost like a triple top, which I would not be all that keen on. Okay, just a moment here and make a couple notes in my journal. Another Steve asks, so the Raptor printed a number 2 signal? Yes, sir. It looks like it did at that. So this was our test of the extreme. Even though it's higher than this one, it still fell within the programming parameters and showed us a market that's likely setting up for a failure. So it did print the number 2 signal. You could have used a second push opportunity on this trade. If we come back with another short signal here, I might be inclined to give that a try. And again, because it's counter trend, I'm probably going to switch to manual mode and just take a single. If you are already short this number 2 signal, your stops above this swing high. $54.18. What important number today, and a little bit of an odd number. I could see 54.15, even 54.20, but 54.18, that's a little unusual. And now they're pressing again. I have a feeling I might have got tagged a little bit early there. Mr. Buckaloo is asking, Eric, when you get above the second line of resistance, do you look for the third or do you look for a top? So I think what he's asking is, here's the primary resistance, here's the first resistance line after, there's the second. As we start to get into the stratosphere here, do we keep looking at the next line as a profit objective, or should we start looking for a top to form? Well, the market's pretty much answering your question for you. You look to the next line as your profit objective. If we break through the third line, then 54.41 is going to be the next target. It will always remain that way until one of two things happen, or actually usually both things happen, not always at the same time. First thing you're already familiar with, because we talk about it all the time, is a test of the extreme. We see the market lose its momentum, and what's usually tied in with that is a trend line break. So if we see the market fail on the trend, show us losing or weakening momentum, then it's time to start thinking reversal. Until then, you should always be thinking with trend, as uncomfortable as that may be. I learned that lesson many, many years ago, where I was trading gold, and this was long before gold was trading at $1,300 an ounce. Gold was trading for $300 and $400 an ounce and falling like a rock. And I kept looking for the reversal to buy. I still remember I must have had a dozen gold options at around 500 and 600. And the market would not break its trend. Every time, gold would go down. And every time it would set up for a reversal, I would start buying. And what would happen? It would keep going lower until the next little hiccup where I would buy some more. And then it would go lower. I knew I was in trouble when about on the third attempt here, I get a phone call from my broker, and he says, "Hey, Eric, have you considered buying some gold call options?" And I said, "Have you looked at my account?" I've already got a dozen gold call options, and they're losing money like there's no tomorrow. So that was an expensive lesson in option trading. But it also drove home the point that you stay with the trend. I know you've heard it all before. Nobody listens to it. That's why it's so few people make money trading. And I'm really choked now that I got stopped there at that little break-even hiccup. So another note in my journal. Of course, you think they could have rallied a little bit earlier than that. So even now, as high as the NASDAQ is here, knocking on 5430, this is a bull market. Now, the problem we're going to have today, or at this point, is where do we buy? We could just, it's a bull market, we can just arbitrarily buy in. We can buy in above the high. Where do we place our stops? Well, I suppose we could place them here at 54.15, but how much you want to bet we're going to see a retrace somewhere around 54.15. The next stop down here, 54.07, brings us closer to the hard edge. That's a little more palatable stop-wise, logistically speaking, not dollar amount speaking. I would not be all that keen to buy in on the high and then have to sweat a $400 pullback, hoping that this is deep enough. So I guess what I'm getting at is I'm pretty much on hold until I get a follow-up signal here. Either a counter trend signal that I can capitalize on, or perhaps a hard edge bounce, or a double pullback, or here on the hawk, maybe a macro pullback. The eagle, I'm pretty much out of the eagle until I see a hard edge bounce here, which could be a long time coming. But that's the difficulty we face right now. Mr. Buckaloo is asking about drawing trend lines. He asks, when you're drawing a trend line, do you start at the beginning of the uptrend or just the last two swing points? Well, here's the deal with trend lines. Those are all correct. You can have a trend like this, and it's a valid trend line, and you can see it's following the hard edge of the cloud pretty well. This is also a valid trend line, as is this a valid trend line. So when you're looking at trend lines and you're drawing them, obviously the most recent trend line is going to be the most sensitive. And as such, it's probably going to have the least influence. Chances are there's at least a few buyers looking to buy with limit orders if the market gets down here and tags 54, 23, 24. That will be a retest of the breakout, and it's also going to be a retest of this more recent trend line. Chances are very good there's going to be a lot more buyers down here around the 54.10 area. And primarily because it's a longer term trend line. This is also, by the way, why we'll very often see a reaction off of the hard edge, because, well, it may not surprise you, or it may surprise you, how often the hard edge and a trend line coincide. That's why, I suppose, part of the reason the hard edge is as influential as it is. To answer your question, I tend to draw a trend line kind of across the last 2 points. For those of you who read my support and resistance manual, you know that I actually draw trend lines normally in reverse. So rather than go from the low to the high in an uptrend, I'll actually go from the last swing point and then draw it backwards. Now this is the last swing point here because we've made a new high. Up until this point, up until we had this breakout here. So let's dial this back. Excuse me. This would have been the last swing point. So I probably would have drawn a trend line that looks something like that. And then it broke, and so I would have been thinking, oh, okay, we might see a short here. And then, of course, it recovered. And once it recovered, the trend, it would be time to redraw the trend line to look something like this now. So here we are back now at the trend line. You can probably anticipate some sort of reaction because we won't be the only ones looking at the trend line this way. And as with most things trading related, you don't want to be splitting hairs. You don't want to be looking at this and saying, we broke the trend line by a tick. The trend line has failed. The market must reverse. No, not really. It might. Don't get me wrong. I still think we might see a reversal here, but because it broke the trend line by a tick, no. If it breaks the trend line by a tick and we see a failure, okay, then I'm in. But you have to remember when you're doing these things, this trend line isn't really here. The clouds, the support and resistance lines, those are not really there. The only thing that's truly here is the price. So you always need to keep that in the back of your mind when you're using these tools. They are tools. They are very good tools. But they're here to help you interpret what price is doing. And it does so by the means of some pretty sophisticated algorithms. Oh, Robert wants me to go over something again. What would you like me to repeat, Robert? The trend line bit, or the part about the only thing truly on your chart is price? Okay, we are getting our pullback now, and things starting to look a little bit more bearish. Okay, Robert says the trend line and the price. Okay, well, here's the deal with the trend line. So we've just broken the trend line, and when I was showing it to you before, we just broke by a tick. And that's not really enough to say, oh, the market's going to fail at this point. Now that we've broken the trend line, what am I looking for? Class, what am I waiting for now? To confirm the trend line break and that the market might be reversing. Yes, very good. A retest and a failure. Dan typed fastest, so Dan gets the nod on that one. Yeah, so okay, we've seen the trend line break. Do we know the market's going to reverse? No, not yet. We have an idea it might reverse. If I get I don't really have a signal here just yet, but let's say I get a trend change signal here in the Falcon, or let's say I get a red bar buy in the Hawk. Let's say the market drifts a little bit lower, and right down here I get a red bar buy signal on my Hawk. Would I be more inclined to buy it or to sell it, do you think? So here's our trend line. We've broken down. Okay. I'm getting a few answers for both sides. Some are looking to buy, some are looking to sell. Those of you looking to buy are probably thinking to buy, well, because we need to see a retest, and that's true. But given that we've already breached the trend line, what if my retest is going to be stifled? What if my retest is going to be this much, and then the market's going to tank? I know it's a lot of what ifs, but this is kind of the thinking process. To my way of thinking, once I've breached the trend line, now I'm looking for the market to show me a failure, to confirm that in actual fact the trend line break is valid. Therefore, I would be more inclined to try to short. It may work out that way, that the market goes up a couple ticks and then falls like a rock, or it may work out that the market recovers the trend and never looks back, in which case, well, I guess no harm, no foul, but I didn't capitalize on what could have been a profitable trade. Here on the Hawk, you see it's following the trend line a little bit closer than it did here on the Raptor. And again, that has to do with the way the Hawk is printing the bars. It's showing things a little bit faster, maybe, than the Raptor. Mr. Buckaloo is asking, what constitutes the failure? Okay, I think what your question is how do I know it's a failure? Well, the failure, by definition, fails to resume the uptrend. So if I typically it gets to the high and then reverses. Of course, the opposite is true in a downtrending market. At this point, the failure is pretty much complete. Normally within a bar or two, the rest of the parameters will be met and we will get a number 2 sell signal. The odd instance, the market will actually breach the high, but not significantly so, before reversing. It shows you the same thing though. It shows you that the uptrend can no longer continue. I don't subscribe to the whole idea of Fibonacci retracements and whatnot. And I know people who are very good fib traders, and they have their reasons for doing so. But I think it's an arbitrary number. I think the reason fib levels work as well as they do is because buyers and sellers have motivation to buy at those levels, and it isn't because it's 50% or 30% or 68.2 or pardon me, 62.8 or anything like that. But look at this trend. We know we opened with about a 20-point gap this morning, right? We know there is some seriously strong buying, right? That is not in dispute. Do you think this little hiccup here is enough to scare away all these buyers? Well, maybe, but I might throw, if we got a signal, I might throw a just-in-case order below there. But really, all this buying, the market rallies from 53.90 to 54.30, almost unencumbered by the sellers, and this is all the buyers can muster after the sellers, give them a little tap on the chin. No, I don't think so. I think we need to see a more serious effort on the part of the buyers, and then for the sellers to start stepping up and actually showing some force. This may well break to the downside, but it could be like one of these sucker bets. Okay, we'll bring you in short, all you early sellers, and now we're going to sweat you, right? Because we are so strong as buyers, we're going to run you up because we know where your stops are. Your stops are right there. Everybody knows that's where the stops are. So guess what happens? You get stopped out. Well, at this point, the buyers may end up fooling themselves because there may be a whole slew of sellers waiting exactly for this to happen. And then they may jump on board and really start to push the market down. Now, we don't know any of this yet. All we know is what it took the buyers to get here. We're waiting for everything to unfold. It's literally a price drama. We're waiting for everything to unfold to see who is in control here. But like I said, I find it really difficult to believe that the buyers can rally the market up 40 points without a significant pullback along the way, and then have the sellers knock them down, just like that, and take them out? Sure, it's possible, but likely. So I am keener to short, to be sure, but I'm not going to go heavy on the short. The market is in a little bit of a transition here, there's no question. Okay, here comes the red bar buy signal. Here's our sell signal in the in the Raptor. So now you need to determine, well, was this the test of the extreme? Normally these are very, very difficult to call. The test of the extreme we like to see is this one here. This is the one you want to bank on. This is the iffy one, the early signal. So wait for a second push. Let's not get all excited and go all gung-ho on the signal. Let's wait for a second push. Let the market retreat a little bit. Show us the limit. Pull back a little bit. And then, I'll set up to short you. And maybe I'll cover above the next resistance zone. Target, of course, would be the hard edge. I may end up stretching that target out. Okay, so you see how we're retreating here a little bit? Okay, I'll throw the order in now. It's far from an ideal setup. I realize that by entering here, I may subject myself to a pullback as the buyers try to recover the market before the sellers try to knock them down. Obviously, I don't know this part. I don't know if the sellers will be able to knock them down. The buyers may, just take my money and just rally the market hard. I don't know any of that yet. This is a just in case. Just in case the floor falls out and the market goes screaming to the hard edge, I have my just in case order in play. And I use the second push opportunity as a way to get me in there. I've mentioned this before. The nice thing about day trading is that you can see how the bars unfold. We had, 20 minutes ago, we had a reasonably strong rally here. Since then, nothing. Nada. Zip. So what happened? Where'd all the buyers go? Are they just resting, or do they feel the NQ isn't worthy of 5430? Is there going to be some profit taking going on here? I don't think there's any reports or anything that are going to affect the NASDAQ, which answers Steve's question, does the crude oil inventory in 10 minutes affect the NASDAQ? No, not normally, Steve. There used to be a closer relationship between the Dow and crude oil, but not so much anymore. So now all really we're waiting on is for the buyers to show themselves or to walk away. It's going to be an either or type deal with the buyers. All right, crude inventory coming up shortly. Here's crude oil. You can see it's just dead sideways, as we might anticipate coming into an inventory report in about 7 or 8 minutes time. Ay, 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 what a mess. Well, I suppose we could bracket. We can certainly bracket above the resistance area at 53.07, which is above the highs. And we could probably bracket 52.70 down here. I'm going to come back to this in a couple minutes. All right, here we're working on a possible red bar buy signal. The Raptor's still a little bit early with the possible short. About an hour after the open, which would bring us to the 7:30 mark. If the market has had some sort of trend, it is likely to reverse on that trend. Not always. It's not one of these rules that are carved in stone, but there is a possibility about an hour into the session that you'll see a reversal. But I admit I'm still not really keen on selling just yet, but we'll see. We'll see whether there's some momentum if we get something resembling a breakout. All right, speaking of breakouts, what an ugly chart. Okay, I think what I'm going to do is, well, we'll go with an OCO order. I'm going to go with the stop limit, and I'll allow the market 3 ticks. I'll buy above there. I'm really tempted to short below the primary support. But all right, we'll short below 52.70. Stop it. And I'm going to run a relatively aggressive stop. And not much going on with the NASDAQ market. Well, what a balanced market this morning. Saw a lot of that yesterday as well. Okay, all set for the crude inventory report. That should be coming out shortly. Dan's asking, can you show the OCO on crude again? Sure, Dan. So I'm looking to buy above the secondary resistance line. So I got a buy in at 53.08, and I'm looking to short. I was going to short the primary support. I hope I'm not going to regret that. And I have a sell at 52.68. The other thing you can do, of course, with the crude inventory report is to actually let the report release and then look for a range to bracket. But we're pretty much in the middle of this one. Crude relatively quiet right now. The Raptor not giving us any signals. Ditto with the Hawk and the Falcon. The Eagle possibly with a green bar sell. But just look at how quiet crude oil has been. This is crazy. You never see crude oil like this. Wow, I may almost have to put crude on the faster charts. All right, the inventory report should come out any moment now. We'll see the Geiger counter probably go a little crazy. All right, there we go. We're filled to the long side. Oh dear, about to get tagged. Yep, and there's crude for you. All right, so now that the inventory report has been released, like I said, you can also bracket it this way. Now that you know the limits that the market has made out of the inventory report, and it's kind of set the boundaries, you can bracket the range. Steve's asking, did you roll to June crude? Yes, yes I did. I think the May contract is due to expire, isn't it? Oh, you guys, now they're just being mean. All right, come on, finish what you started. I think I just just got filled on the NASDAQ short also. Yes, I did. All right, well, they're not playing very nice right now, that's for sure. All right, here we'll put this on the shelf over here. And here we are riding out now the test of the extreme that we were anticipating. Might actually come back now with a number 3 signal, a hard edge bounce. And it looks like the buyers are going to give it one more go here. But this is the chance that you take when you try to take a counter-trend signal, is you're anticipating the buyers are going to lose their grip. Once we see the test of the extreme, it becomes more predictable. But until then, it is a little bit of a crapshoot. No, the buyers are just not walking away, which of course, we halfway expected because of the very strong rally that got us here. We really need to see some aggressive selling. And this 54.25 would actually be a pretty good area to short from. The sellers that sold up here would be looking for another reason to get short. The sellers that sold down here, along with us, would be looking for another reason to short. And if they started shorting, say, 54.25, or even shorting from here, from where they are now, remember, we're bearish. We have our reasons to think the market is going to head lower. Well, if we short from here and prices go back down to here, we're essentially in a break-even type situation, are we not? We've lost money on this part of the trade, but we've made money on this part of the trade. So the traders that are bearish, they're selling. They're selling and hoping that the market will head lower, obviously, and that even if they lost some money on this position here, they can make up some money on the other one. Now, that's not quite dollar cost averaging or stuff like that, but that is the way the market works. I tend not to do that because I don't want to over leverage myself. I'm already in. I got a couple $100 in play here. That's enough if things go poorly. Everything's been in slow motion this morning. So the Falcon working a trend change signal. We got to come back here now with a couple of red bars and a sell signal. The Eagle producing a soft edge bounce, but it's against the ATR, so I wouldn't get too excited about that. And the Hawk all kind of tangled up at the moment, so it's kind of what we anticipated. Everything's in limbo. I would have thought a move back to the hard edge, 54.10, maybe even 54.15, was not an unreasonable assumption. But the market not showing a lot of love here at the moment. And then we got the deal of that big gap all the way down to 5,400. Well, Trade Forecaster says we are in scalp mode, so the market not inclined to make a smooth move from A to B, or perhaps less inclined. on, sellers, where'd you go? Well, we just cannot get the market to give us any follow through. Come on down. There is also the possibility that we are just going to move into a sideways trading range. You can see here on the Hawk, we're starting to get a lot of yellow bar clusters, and they're not going anywhere. All right, something resembling a slightly better test of the extreme. Like I said, everything's going in slow motion here this morning. Okay, there we go. So this is going to be now another number two signal. That's our soft edge sell. We had the test of the extreme. This should be a little bit more reliable this time. I'm going to take a chance here and try to run this one out a little bit. I'm just wondering whether the market's really going to even try to get into that gap. A retrace here to 5,400 would just be huge, would be a fantastic move to the short side. Obviously, we first need to get below 54.18, which has been a real thorn in the seller's side all morning. Come on. Really? You're really going to bounce off there again? Wow. Doggone it. I guess I should have entered on the other side of 54.18. Who'd have thunk that line would be so strong? That's just crazy. we're still hovering here. All hope is not lost, but I tell you, if they don't get busy soon, I may have to rethink my position. We need to see 54.18 break. It's really as simple as that. If it doesn't break, then we could be up against the wall on this one. Stops are in the right spot, though. Risk is an amount I can afford. So really, that's all we can do. Well, we'll hang with it for a few more minutes here, and hopefully we will see the sellers step up. Yeah, not so far. And of course now here comes the hard edge bounce signal. So again, just kind of confirming the stagnant nature of the market. I think we're going to button up shop here for the moment. The market dead neutral here. I'm going to try to finagle this trade into a profitable position, or at the very least a break-even position. If you haven't already done so, it's probably advisable to get that crude oil trade to a break-even position also, as crude is beginning to flounder. And yeah, this is where we're at right now. So not much we can do with it until things loosen up. So we're going to pack it in right now, and I will see you again tomorrow morning. We'll talk to you then. Bye for now.